Two. Hey, everybody.
Hey, Megan.
Hi, Megan.
Hi. We have a special guest today, Rick. We have John Boyd. John has been our personal insurance agent for the last 12 years and the most professional guy I know that deals with insurance. Obviously, that's why we have him. And he's knows what's going on in the whole industry right now, which is a whole lot of changes. And so we were going to go over that today because people are getting letters in the mail about getting their policies canceled, or sometimes people get letters in the mail that they need to get their roof inspected right away. I've gotten a couple of those calls this year, and maybe some upcoming changes to the insurance industry in California and some requirements. So there's a couple of things on topic today, John. So we are all ears.
Okay, well, the new topics are that if you receive notices of non-renewal from your insurance company, don't wait until the last minute. Please shop as soon as you get that letter. And most insurance companies are now requiring you to do a flow by Moen, which is an automatic water shutoff valve in front of your home that will automatically notify you if there's a water leak.
I love that.
Huge water damage. And I mean, it's costly, but it actually saves money by
I believe, because I looked up the part. I think it's like $350 or $450 on Amazon, flow by Moen. And I talked to my plumber and he hadn't heard about this, and I thought, what a great side gig for a plumber, just specialize in insurance requirements and put these contraptions in. And what it is that it attaches to your main water line, and it has a little turbine that spins, and it learns through an app on your phone how you use water in your house. And so if you're using an excessive amount of water during a non-typical time, or there's a steady flow, then it alerts you so you can turn off the water and avoid property damage and cost.
I had no idea. I had no idea that was even available. Wow.
There's a couple of them. There's that flow by Moen with the turbine. And then there's some other, because ever since John told me about this, I've been low-key freaking out because, you know, that means we have a lot of stuff to do. But there's another kind too that has sensors, and the sensors go under your sinks or, you know, around your place where there's water. But I think this whole turbine, you know, flow by Moen business, I think that's probably the best deal.
Oh yes, it is. And after you get it installed and everything, you're going to get a certificate from Flow by Moen that you need to actually submit to your insurance company because they require it. It's a requirement within 30 days of closing escrow on a new purchase, or if we're writing a new policy. Before, you had to have it installed before we wrote the policy. They've actually let up the underwriting on that, so we can actually do it within 30 to 45 days.
Okay, that's good to know.
And which is great. I mean, and it's actually saved a lot of people, of my clients that have gotten it. It saved them from water claims.
Oh yeah,
they automatically shut off, and so they found out where the leak was, and it didn't damage their home.
I love that. Yeah, we've never submitted a claim, but we've had some we've had some water issues, and man, yeah, it gets real messy and real expensive. So
that's one of the leading causes of the insurance premiums increasing so much, is water claims. And as you can probably see by everybody's premiums are increasing by water claims, and all the natural disasters that have happened in the last couple of years have just driven premiums up, and materials are costing so much, in labor.
Right, exactly. I know, like, you know, when we have our policy for our house, it's 100 years old and it's fantastic, and it would not cost the regular amount of money to replace it. So I know that you and I have reviewed that and made adjustments, you know, just in case something happens, that we're going to have the correct coverage to rebuild as close to possible the same quality that our house is now.
Correct, yes. That's why we try to do like kind and quality for every rebuild.
Yeah. And then so So people are talking about the insurance premiums going up. I mean, what are we going to see this year?
Well, they're going to be cracking down on a lot of things that on premiums. Basically, what has driven premiums up is water claims and basically the natural disasters and how much it's costing to rebuild homes. But there are discounts that you can get if you have multiple policies with the companies that you have. And also, it's basically some people are going to higher deductibles.
Mm-hmm.
Some are going to $5,000 to $10,000 deductibles.
Right.
But I check out and see how much of a savings it actually would be and see if there is enough to, go up to a higher deductible. If it's only $100 difference, I wouldn't recommend it. I mean, if it's like $1,000 difference, I can look at that because it would take, a difference of maybe 4 or 5 years for the deductible difference there. If I have a 2,500, it'll take 2.5 years that in case I had a claim, it would be covered. Instead of paying the higher premiums, you've locked into a lower premium. Okay.
That's funny you said that, because that's kind of what we do when we look at should somebody refinance or not. It's like, all right, well, how much is it going to cost to refinance? And, what is your savings going to be? And how many years is it going to cost to recoup that? So it's same kind of bird's eye view on that.
And I mean, the insurance companies are really getting really technical now because they're doing aerial views of homes. If the homes have got scattered debris in the backyard or junk in the backyard, they will set them up for non-renewal, but they will give them a chance to clean up their yard. Or if trees are touching the roofs, and because it causes mold on roofs. And I mean, they're really cracking down, trying to make sure that people show pride of ownership on their homes. It's just letting them deteriorate.
I know on one hand, I'm like, what aerial views? Like, that's Big Brother. But on the other hand, I'm like, well, they are insuring them. So I guess they have
well, they're very high up. The aerial view is very high up. They don't just like, they can tell who's in the pool. No, it's an aerial view just to see, because I've got several of them that they had quite a bit of, stuff in their backyard. They look for old broken down cars or stuff like that too. And it's basically, if they have junk in their backyard and junk everywhere, how's the inside of the house look?
Right. Yeah.
Yeah. So it's like, basically, are they taking care of their home inside regarding their plumbing, their electrical, is it, a hoarder home inside? You don't know. So that's why they try to get us to go out and inspect too. I mean, roofs, wood roofs are big no-nos now though.
Sure.
Wood roof. I mean, we're trying to, well, you have to have them tuned up, as you know, every few years. And if you don't, they start curling, and the insurance companies are saying, no, you need to have them updated. So I'm working on a couple of those right now that they actually had to have the roofs redone and partial, to tune them up. So it helps with documentation and new photos, So, but things are changing, it's like, a lot of the insurance companies are actually going to be coming back in the market, hopefully in the next few months, that have left California, such as Allstate, State Farm. They're hoping to come back in the next 6 months, they say. But we shall see, because they stopped writing almost a year ago.
Right.
Because their loss ratios were so high in the state of California.
Oh, wow.
So is that why insurance companies are...
I'm sorry?
I'm sorry, go ahead. No, go ahead, I'm sorry.
Loss ratios are basically how many claims are coming in versus how much money is going out. And most of the insurance companies after COVID were experiencing loss ratios at 178%.
Wow.
That's not gaining money. That's high.
Right.
And right now it's still over 100% right now. They've dropped it down to 129 last time I looked, which is, I mean, it's still, you're losing money, but we're still in business. They're staying open. So that's a good thing.
So I guess my question is, assuming that someone is taking care of their home, there's no debris in the backyard, there's no other issues that they are aware of, why are homeowners getting these notices? What's triggering the notice?
Well, it depends on the company. I mean, if the company is still doing business here in California, several companies are leaving California. Okay, so if you're receiving the non-renewal notice, that means you're going to have to shop around for other insurance. But I mean, that's some of the main letters you're getting is non-renewal, or if they've got damage to their home that needs to be repaired. Okay.
So is it
And-
not, is it just random or this their decision just to leave the state of California? What if someone is, for example, with an insurance company that's not leaving the state and they get a notice like that? Is that happening?
Well, it depends. In certain areas like high
Mhm.
brush areas, we're non-renewing in those areas because you have to end up doing it's called a wraparound policy. You have to do the fire insurance is covered through the California Fair Plan, which
Mhm.
will cover the fire, and your belongings inside your home. Then you do a wrap, which is through like farmers will do a wraparound policy that you cover everything else through farmers. So you're actually going to be getting two insurance bills every year, which is kind
Okay.
of a pain, but I get it myself up in Big Bear, my place up there, because they made everybody up there. They canceled everyone, and we had to write a California Fair Plan, then the wraparound, which it's not the best in the world, but at least I have insurance up there.
So the
Right.
wraparound means like liability.
Your liability, and also your in case of theft, or if a pipe breaks in your home,
Mhm.
or if you have a dog bite, that's all covered under your homeowner's policy.
Well, certain dog bites, we know that.
Yeah,
So,
certain dog bites. Yes, we do.
yeah. Okay, so so it covers your covers if someone breaks in or gets hurt, but then the California Fair Plan covers for
The
fire.
fire portion, yeah, the
basically.
fire
Yeah.
portion is all covered under that. Yes.
The last time I checked, an average California Fair Plan was about they were really high in price, and then they came down a bit. Now, what is it, about 2,500 a year for an average plan or something?
It's about $2,500 a year. It depends on
Yeah.
the size of the home
Right,
and how far or how close they are to brush.
right,
Basically, it's based on the dwelling amount too. They will
right.
only go up to a certain dollar amount, but they are increasing that finally now.
Yeah,
They were
that's
only allowing up to $1.5 million worth of coverage for your whole dwelling with your contents. That doesn't cover anything now. They've really increased that up. I think it's 3 million now.
oh, that's good. And then what Rick was saying about cancellations when they're not leaving the state, but they're sort of, and then you touched on that they're leaving the area, like a high brush area, but also our insurance companies are sort of taking a view and saying, gosh, we insure way too many houses in this neighborhood. If the stuff hits the fan, we're in deep doo-doo. Let's dilute this a bit.
Well, matter of fact, you mentioned that if I'm not able to write a home through farmers, I go outside of farmers, and the outside companies are actually giving me a red flag on certain areas that if I go to put the zip code in, they say, no, that area is closed off. We have too much insurance in that area. So I'm
Yeah,
not able to write it through them. I have to go through somebody else.
that
But
makes
there's
sense.
a red flag because they've got so much, absorption of,
So
properties.
limit their liability.
Mm-hmm.
Yeah.
Mm-hmm. Well, that
Well,
makes
that's in
sense.
case there's a major fire, it's going to wipe them out.
Right, exactly. I know, I think after Paradise, so many things have changed, and I mean, they've changed a lot for realtors with our discussions with our home buyers. We have to do a lot of fire disclosures, even if we're not in a fire zone now. I mean, it's just like, hey, anything's open. Okay, so John, so whenever my clients need insurance, a referral for insurance, or if they ever get up the creek, I always have them call you because you're able to help people out. Even though you work at farmers, you're able to help, and people, and where to go to find an insurance policy.
That's correct. It's like if I can't do it with farmers, I normally try to go through another avenue. And if I'm not able to go through that avenue, I will search because it's a referral. I will search somebody that can do it for you.
I love that.
Just hanging out in the, out to dry. I'm just going to
I
try
know.
to help as much as you can.
I know. You've never told any of my clients, well, sorry, can't help you. Good luck with that.
That's not how you do business in my book.
I know. I know.
Yeah,
I appreciate that. Rick, do
I
you
try-
have any other questions for John?
No, thanks. That's really good stuff. I did not know some of those things. That's I hear about these notices people are getting, and just kind of, it's interesting to understand why and how things are happening and what people's options are now.
Mm-hmm. Good.
Different world.
Yeah, it sure is compared to a year ago. It is a completely different world.
Yeah, we're even our broker has been beating us over the head with, as soon as we get under contract, to get our buyers to get themselves their policy in case there's any in case there's any reason that it's not going to be insurable, that we know about it at the beginning of escrow and not at the end.
Well, and make sure that they check back, because sometimes it closes off, like I said, in certain areas. Because I had the same one. I had a lady that she was being non-renewed out in Redlands, and I had her all locked in with the insurance company. When I went to buying coverage, it was no longer available in that area. So I had to scramble to find her something else through someone else.
And I bet you were like, oh, it's no big deal. Here you go. Here's the new.
Well, it is, they were lucky to get the insurance, because she, of course, unfortunately, she had several claims against her.
Oh,
for
yeah.
water claims, for water claims.
Oh, yeah. See, that's another thing. We have never made a homeowner's insurance claim in all these years. And we have had stuff happen. And I just figure in the long run, even if it costs, I mean, it would have to be pretty catastrophic for us to make a homeowner's insurance claim.
I'm with you all the way. I mean, I've done the same thing. I've lived in the same home for 34 years, and if there's something that happens, I'll fix it myself, because I'm only going to use my insurance in case there was something major. If it was hit fire, hopefully it won't. Or if there was a major flood in the home.
Right.
Which, it's like, I mean, $5,000, if you can afford 5,000, yes. But if it's 10, 20,000, that's when I would think about turning into the insurance company.
Yeah. Oh, one more question too. Anything new on the earthquake insurance part of the world?
Earthquake premiums they're actually staying pretty steady right now. And you still get discounts for having both with farmers. But there's also a company out there that you can get more comprehensive coverage. It actually covers a lot more, and the premiums aren't that bad. And I mean, a lot of people are buying it because of the fact it offers you broader coverage than the California Earthquake Authority Fund. They've actually dropped coverage. California Earthquake has actually dropped coverage on your personal property.
Oh, wow.
Before, you were able to get up to 200,000 in personal property. Now they've dropped it down to 25.
Oh, wow.
That's not very much.
No.
That's why most people are going to a more comprehensive policy through another agency or another company.
How interesting, because I know the last time we spoke about earthquake insurance, it was a while ago, and it was like, okay, for example, you'd get like a 30% policy or something. So you'd have to fork up, the 70% to start the project, and then the insurance would finish the third. It's like, oh my gosh, is this even worth it? It's just so much money.
On an earthquake policy, if normally it comes with either, you used to be able to get a 5, 10, 15, 20, or 25% deductible. Standard is 15%. But if your home sustains $100,000 worth of damage and you've only got 15, they're not going to not pay you. They're going to just give you the 100 minus the 15. They're not just going to wait until you come up with your deductible. They are going to pay out, excuse me. But they don't cover hardly anything when it comes to like loss of use.
Yeah.
$1,500. Where are you going to get a place for $1,500?
Oh my gosh,
you have a motorhome in the driveway.
$1,500. Yeah.
I mean,
and what
that's
if
what I said, there's a more comprehensive policy.
What if you have what if there's an earthquake and your chimney falls down, but it falls down on your car?
Well, that's two different claims then.
Okay.
The one on your car would be your comprehensive claim, because it's falling objects onto your vehicle.
Yeah.
And then, of course, the chimney would be under your homeowners or your earthquake policy if you had it. But also, if your home catches fire, they would know after an earthquake and it burns to the ground, that's part of your fire insurance. That's not actually your earthquake. It would be under your fire insurance instead.
Oh my gosh.
Yeah, so I'm just letting you know that too. I mean, they've got so many different things now.
I know. I think that's about all Rick and I can take. Right, Rick?
Yeah, it's a big puzzle. I'm telling you that. I'm trying to see where all the pieces fit here.
I know. This is why it's like, the more complicated things get, I like to have people that I work with, like you two, that have been in your industry for so long. You're like professors at what you do. So I appreciate both of you very much. And John, we appreciate your time and being on our podcast today. You can find us on YouTube and iTunes and Spotify and Instagram and all kinds of places. So we'll make sure we'll put your contact info there. So that way, if anybody has any questions about their plan or they want anything reviewed, that they can contact you directly.
Great. Thank you so much for your time too.
All right. Thanks, you
Awesome,
guys.
John.
Have a good day.
Thanks, Megan. See you guys later. Take care.